What's going on, guys? This is Tom with Nexus AI Trades. I want to go over a few trades that we caught Friday, January 16th, yesterday. Identify how we caught them and how you can catch the next one. So what I have pulled up first is NASDAQ futures. If I'm trading QQQ or SPY, I always chart the futures because it is a leading price action. So trades throughout the night, in the morning, before the market opens. So if you don't do that, that's a good tip to switch to. So with the NASDAQ, what we saw Friday was a steep sell-off right at open. All right, prior to that, the day before, we also saw a sell-off. So what I like to do is identify supply and demand zones. A zone is where price became imbalanced. One side took over from the other. So in a case where there was a balancing out price, buyers and sellers agreed, and it led to a supply imbalance, meaning supply side was heavy, there was more sellers than buyers, would identify a supply zone. So in retrospect, what happens here is price grinds back up until it reaches a zone, tags, and rejects, right? So this supply zone is not invalidated until we breach previous highs. So in this case, I'll fast forward here, we saw price rise, started bouncing out and reject. So there is where I identify a supply imbalance. So I'll go ahead and mark my levels there for supply. I like to mark red. Let me zoom in a little bit. And I'm going to go to the bottom of the body. I always go top of wick to bottom of the body. In this case, poison. It could be this only candle. It could be the previous candle. It doesn't matter. We're mostly concerned about the bottom of the body for supply. Likewise for demand, we saw selling pressure, balancing out, and then back to the call side, or buy side. So here I would kind of the reversal. Keep in mind, these are each 4-hour candles. So this was 12 total hours of price balanced out. Buyers and sellers agreed on a price here until bulls ultimately took over. So since it is demand, I will mark it green. So top of the body to bottom of the wick. Now again, it doesn't matter. You can go bottom of this wick. It can even be this. You want a good risk reward, make it as small as possible, right? Go to the just that one candle, like I kind of did that one earlier with the 2-hour zone, right? Top of wick, bottom of body. For this one, top of body, bottom of the wick for demand. In this case, like I'm saying, better risk reward, meaning you enter if it tags here and starts to bounce. Your risk is if it breaks below this zone, you cut it. Your reward all the way up here. So you can see you're risking only a little bit for a higher reward. Anyways, let's go to a shorter time frame to see how it played out. So this was a move that I did not catch, right? Price slowly grinded up throughout after hours and then pre-market on Friday. Tagged supply right at open and immediately dumped. So great trade. If you're trading 0-day options on puts, man, that's hundreds of % of gains. But what I was aware of and what I did catch was this demand zone reaction. So while we're in a free fall, I'm going back looking, all right, where can we expect price to bounce? It's not just going to bounce out of the blue somewhere in here, right? Once you pass this wick here, there's not much there to catch it. So we're looking at where was the last place where buyers and sellers agreed on a price that they want to see this stock indice move down until we're at a agreeable level. So once we reached that zone, buyers stepped in and they took over. So I took a long position here. I bought QQQ calls. Sometimes I'll trade futures, sometimes I'll trade options on the ETF. And to identify a target, it's as simple as VWAP. Volume weighted average price. Price flushed to demand, tagged, saw a reaction, and grinded up to VWAP. There we saw another reaction and a sell-off from VWAP. So really all you need here is volume, price action, and patience. That's all you need. So there was many trades to be taken here. You could have shorted off of supply. That would have been the most meat on the bone. Long off of demand. Rejection off of VWAP. Again, VWAP reaction. So this is an example of one day. It happens almost every time. Another great one I pointed out on Friday. If you're not a part of our Discord, it's a great place to find great trades and a community of like-minded traders, was MU. So MU has been grinding. It is a volume leader. There's a lot of news, a lot of inside buys. So it's a name to pay attention to recently. So what we're looking at here is a gap up pre-market. Now most traders are looking for this gap to be filled and go long. With a leading name like this, you may not see that. It might take weeks, might take months. There might be gaps that never get filled. So what I was looking for here was this rise in pre-market and a slow sell-off before opening candle and it takes off. Now, this is a trade I want to be in, and I'm not going to chase it. So what we mark here is where was price previously agreeable. Here is where the reversal took place. Here is where I mark a demand zone. We had 15-minute demand sitting right at the opening candle. If we go to a 1-minute chart, and I usually don't trade the 1 minute, but I'm just showing an example. We saw a slow sell-off back to demand where we had a tag, a quick reaction, another tag, and a grind higher. So from 353 to 363, a $10 move at end of day Friday yields a lot of return on a short-term option contract. So again, just one way to identify a quick trade. Again, here VWAP would have been a very smart and strategic target here, leaving you with a $4 move, and above VWAP you can always get back in the trade. But I just wanted to break down a few trades that we took on Friday, and something you could practice on your own. Thank you.